Hello folks, I am Jon Najarian and this is Crypto Conversation with the Chairman of DLTx, James Haft. James, welcome sir. Great to have you on the show. I've heard great things about you. I eventually met James at Blockchain Week in Puerto Rico at the Coin Agenda.
Yep.
I think where he and David Johnson were there just doing a bang up job explaining exactly what DLTx does. And I think people were kind of blown away by it. So great presentation there. We're here at CFC San Moritz, and people are also blown away by what James has been telling them here at CFC. So James, give us a little bit about your background, because I think in many ways we have similar backgrounds. Yours was at a higher level. I was a floor trader. He's an investment banker. But nonetheless, I did clear Bear Stearns, by the way.
Exactly.
So tell us a little bit about your beginnings in finance and so forth.
Well, I like to say I'm a recovering investment banker. David Johnston, my partner, always gets upset when I say that, because the truth is, I really am a decentralist who believes completely in the new economy that's being formed, the decentralized economy, which is powered by cryptographic assets and digital assets. My background was investment banking. My background was specifically emerging markets investment banking, looking at new markets and how do I bring access to the opportunities represented in those investment arenas back to U.S. and global institutional investors. So I started out in Asia, where I ended up running corporate finance for Bear Stearns in Hong Kong. I took public the first company in China that listed on the New York Stock Exchange. It was a motorcycle company. And very interestingly, the deal that we did in China and the structure that I used to get over the legal issues for listing Chinese assets in the United States are very similar to what we're doing today with creating access for institutional investors to invest in cryptographic assets, in crypto and digital assets. And so what we did historically in 1991 for Exec China Motorcycle was I took the equity of the Chinese company, which was illegal for U.S. people to hold it in China and illegal for Americans in the United States to have it as an asset. It was outlawed on both ends. I took those shares and I put them into a BVI holding company. I took the BVI holding company, I put the shares into a holding company in New York, and then I floated the New York holding company on the New York Stock Exchange. So the U.S. investors had an investment in a U.S. company. The Chinese company was owned by a BVI entity, and so there was no crossover of jurisdictions, so you didn't have the U.S. and the Chinese systems conflicting with each other or having to worry about jurisdiction or sovereignty. And we're doing the same thing now with creating opportunity for investors in the institutional and retail environment to invest in a public company that offers the retail investor crypto returns in a liquid, transparent, regulated investment.
That's DLTx in a nutshell, folks. That's going to do it for us from San Moritz.
Gotta go. Buy the stock.
Not quite. You have such an interesting history, James, of all these different things that you were doing that brought you to the point where you could see the vision that ended up becoming DLTx. We're not exactly neighbors, but we both live in Puerto Rico. He's got a great team down there in Puerto Rico, as I mentioned when we ran into each other at Blockchain Week and so forth. And DLTx takes a really different tact at doing what it does. I mean, there are companies that I love, like Hut, for instance, Hut 8. These ladies mine Bitcoin, hold on to it, borrow against it, and so forth. But when Bitcoin hits the skids, that can really be a negative for the stock, and you've seen how that plays out. Obviously, it works the opposite on the upside. When the upside's running, everybody's great. They're all happy and cheering. But your company doesn't really take on that same amount of risk. How do you do that?
Right. So when you focus on investments, there's only one equation that matters: the time value of money, right? And you discount, using the interest rate, how risky the opportunity is, and the less risky you can make it, the higher valuation you get. That's how Wall Street works, right? And so we looked at where the risk points are in investing. So if you're investing just in the tokens, you're making a directional bet you don't really know what the future is for those platforms, and you have no control, and they're subject just completely to third-party, independent variables. What we decided was to create a business around the tokens, around the platforms themselves, and to use the activity of mining the token as the opportunity to build the network and provide the service that the protocol was meant to provide. So for instance, we mine Filecoin with the idea of being the largest provider of decentralized storage in the United States in the near future. And we believe that decentralized storage is very important because otherwise you're subject to censorship. Very much like in the last election cycle, Parler, which is a Twitter analog, which was used by the right wing, was shut down by the AWS service system where they stored their information on the cloud servers. And it's interesting because no matter where you stand on the political spectrum, you can't deny that was censorship. And if you're American and you believe in freedom of speech, whether you like the speech or not, people have the right to present themselves. And when we start to have third parties and private entities doing censorship, it's just as bad as the government doing censorship. And so we need to protect each other and our right to communicate. And we think that you're going to owe it to yourself. And corporations are going to be negligent to the extent that they don't store their information in ways that is censorship proof. And the key way to do that today is a decentralized platform like Filecoin. Filecoin is the leading platform for IPFS, which is the oldest and most trusted way to store information in a way where the person who owns the information never loses control, has self-sovereignty over that data, which means that no third party can shut down your access. As long as you're paying your dues to the system, as long as you're buying Filecoin and paying the Filecoin, then the protocol, which is not a person, but it's an algorithm, the algorithm will give you access to your information. And so we believe that you're going to open the paper one day and you're going to see a mad rush to decentralized storage, and we think that Filecoin is going to be the main beneficiary of that, and we're going to be the largest producer of Filecoin in the United States.
And as you produce it then, just like the other example, you don't just hold it and borrow against it. You're putting it back into the system. You're selling it back out, correct?
Well, yes. When you buy a token, you're just taking a naked long position, right? And so we're not sure that that's the right way to participate in the market. We think it's much smarter to produce the tokens than it is to buy them. And specifically, we only focus in protocols where the token is already trading at 10 times what it costs us to produce it. So we're starting businesses which have 90% margins, right? And people say, well, that's not possible. How do you know when you start the facility, et cetera, et cetera? What you're not understanding is that we don't start the machines and then figure out what the margins are. We look at what the difference is between the price to produce and the market cap, and we don't go into that market unless that arbitrage is there already. So the first thing is we know what our margins are before we enter, and they're big. Okay. The second thing is that producing the token itself is just the key ticket to entry to providing the service. Everyone else is producing the token, but they're not providing the service. So basically, if the token goes up or down, that's their only play in it, and you're naked if the token goes down. What we do instead is we're actually using the cash flows and the profit to build the capability to deliver the service that the protocol promises. In this case, it would be distributed hard drives. And what's interesting is that we're starting to take the classic capital markets techniques that you and I both have known for years and starting to apply them into crypto and into the decentralized world, because in my mind, those markets are no different than the historic markets. And the people that are telling you this is different and you have to reset everything and you have to relearn, they're missing the point, because humans are the same. Regardless if it's virtual, regardless if you're medieval, if you're Jewish, Christian, or Muslim, it doesn't matter. We all have the same needs. We all have the same desires. And as you move from market to market and situation to situation, your needs stay the same. So the needs of the financial market in crypto are the same as the needs of the emerging markets in China or of Wall Street for financing the United States. So what we're doing is we're taking the techniques that we've learned and applying them into how to finance. Mm-hmm. And then we're looking at how do we remove the risk from the system so we're a better investment than the tokens themselves. So one of the most interesting things I've learned in emerging markets is I could go to Brazil and I could fund a business that was brilliant and it could perform much better than I expected, and everyone could be thinking we hit a home run in Brazil. And the exchange rate between Brazil and the United States could change, and the value of the currency generated by the facility could drop, and all of a sudden, a home run that's producing everything they were supposed to produce in dollars could be a big money loser and essentially be bankrupt, unable to pay back their dollar debt. And that's no different than how most people fund their investments in digital assets. They borrow dollars, ETH or Bitcoin to buy a third altcoin or other coin that they're functioning in, and then they produce it, and at the end they produce this token, and if the value of that token is dropped, they can't pay back their debt, and they're out of business.
Yeah.
So it's very expensive to borrow as one of those companies because the lenders want high interest rates and they want over collateralization because they're worried that if that you won't be able to pay back the debt because of a currency exposure at the end. So what we do is we borrow the same token that we're producing and we pay back that token to the lender. So at Filecoin, we borrow Filecoin, we produce essentially 2 Filecoin for every Filecoin we borrow. We pay back about 1.1 tokens back to the person that lent it to us, and we get about 0.9 essentially for free. So our business model is based on how much can we borrow and how much can we run through the system, and we're indifferent to what the price of Filecoin is and how Filecoin or Bitcoin or Ethereum could vary against the dollar, because our obligation is to return back Filecoin. And so this is a long-term strategy to be producing Filecoin at a significant discount to market so that we can fund and sell them on day one if we wanted to, or we can store them and keep them in anticipation that Filecoin is going to go up tremendously, with the understanding, furthermore, that we can reinvest our own tokens to build out more, stop borrowing from others and use our own tokens to build the network. The interesting thing is that most people that you'll invest in today, they produce a token, even public, private, and they then sell that token. They're not in the business of the protocol, they're just in the business of generating the tokens.
It's a good differentiator.
So what we've realized is that the value of running the service in the long run will be significantly more profitable than generating the tokens. So we think people are throwing out the baby with the bathwater. What we're looking to do is take vertical interests in the new decentralized economy, and I'll explain that in a moment, and take these, so here Filecoin, file storage, and basically we're going to run a file storage network that's going to compete with Amazon Web Services and with Microsoft Azure, and we're going to be a cheaper alternative where you have self-sovereignty of your data and we are no longer at risk of someone ever shutting you off from your information. And we think that that's going to be a growth area, and we know that it's going to be more profitable than just the mining activity, which is how our company and other companies are currently valued.
And so you do the same with, for instance, helium.
Yes.
With helium, you're out there, you're working on the helium, and you're basically the Wi-Fi, the distributed internet, if you will, through the helium network. You're supporting that.
So we're not yet in helium, but helium is one of the protocols that we would naturally be looking at. The idea is structurally to have all the required vertical support infrastructure that's required for future decentralized, digitized businesses. So you'd have money, that's Bitcoin, right? You'd have file storage, that would be Filecoin. If you did IoT connectivity, that would be helium. If you did internet computing, it would be ICP, right? If you wanted to do, we're looking at distributed rendering, so you can deliver codecs, for video faster and cheaper. And so basically, what's going to happen is that current business services are going to be modularized and then specialized in protocols, and we're going to have a portfolio of offerings where we can invest in companies and then offer them the infrastructure they need to be a proper distributed network on the Web 3.0 future.
Amazing, amazing. And publicly traded right now, folks. I mean, the company is listed in Oslo, so it's a Norwegian-based company, but it trades on the Stoxx 600, or it's part of the Stoxx 600?
Basically, we trade in Oslo on the Norwegian exchange, which is part of Euronext. It's actually the largest exchange.
Euronext.
We're one of the top traded shares in Oslo. Legally, I have to say that we're not directly available to U.S. investors. We are available on the pink sheets, and there are ways to buy the shares through the proper channels. Call your broker, and they'll have a seat. But that's through with my legal.
That's the disclaimer right there.
That's my disclaimer. But we're available, outside the United States freely to anyone that could type in DLTx into Euronext, which is basically the NASDAQ big board globally. And we think we'll come to the U.S. as a liquid opportunity over the next 24 to 24 months, maybe faster. We decided to be outside the United States because the regulatory regime is more certain outside the U.S. right now as the U.S. is deciding what the proper way is to treat these digital assets. We respect the regulators' determination to take their time, but we felt that it was important to get started, so we started in Oslo.
Fantastic. And I would think that this is going to be a very interesting way for people to participate in the digital markets without the same risks that some of the other protocols, tokens offer, as well as stocks.
Well, I think that the institutional investors are going to need to allocate against the new Web 3.0 decentralized economy. And right now there are very few assets that they can invest. So we've shaped our company to be the Kleenex for the tissue market, right? We want to be that first to market, regulated, secure, and understandable business where you can have your allocation to the risk that you want to have, offer crypto returns to institutional and retail investors in a way that's transparent, regulated, and liquid. And that's really our focus, is to be that flagship and proxy investment that you'd want to make as a as a family office or someone who's more conservative and doesn't yet understand the digital economy, but knows that you need that in your portfolio.
Beautiful. James Haft, Chairman of DLTx. You'll be hearing more about this from us, and I imagine from a lot of other folks. Thank you, James, for joining me today from St. Moritz, Switzerland.
Thank you so much. I really enjoy your show, enjoy you, and glad to have you in Puerto Rico.
I'm glad to be there.